Hello and welcome to the show. Today we have with us a special guest, Bernard Mensah, who's the President International at Bank of America right here in Mumbai with us. Bernie, that's what your popular name is around here. Welcome to India and welcome to CNBC TV18. Now, how has been your visit so far? You've had a hectic schedule. You've met several companies, investors, your clients, and even the government. What is the sense that you're getting on India, especially because we have just come out of a big event of elections?
Thank you so much. Thanks for having me on your show. It's terrific to be here. You're absolutely right. I started in Delhi and on Monday and came down to Mumbai over the last couple of days. It's always terrific to be back.
Yes.
Great to see our colleagues, which is one of the main reasons to be here. We have a terrific team here and actually all around India. And also really great, obviously, seeing our clients and seeing policymakers. You're absolutely right. A lot of what was on my mind and a lot of what people outside are looking to India with is, since the elections, have things changed and is there a different direction? The results were a little bit of a surprise to casual watchers. Maybe for those of you on the ground, it was completely expected, although elections are you never know exactly how they'll go. And the sense is that there's actually quite a bit of continuity. I think there's a real consensus as to the economic path that India is on and the policies broadly that they're on. So it doesn't feel, definitely from the last 2-3 days that I've been here, that there's going to be a dramatic change.
A dramatic change, all right. And you still have to see how this really pans out. But policy continuity largely is one thing that global investors and global companies like yourself really like about India. That's what I'm picking up.
And can I say very quickly, sorry to interrupt,
No,
it's
sure.
just that not just the policy continuity, but I think we have all been really impressed with India's democracy as well. It's quite a thing of wonder, the scale of it, the size of it, the timing of it. And there's a sense that through that process, it reinforced the institutions that you have. It was able to deliver a message to all who want to watch and see it that was, reasonably, clear. And I think that is also a positive for, market participants.
Right, Bernie, but you look at the international business for Bank of America. How does India fit into all this, and what is your global outlook at the present time?
So India is so central to us at Bank of America in so many ways. We have over 30,000 colleagues here across the piece. Of course, we have some support functions here for our global platform, but we have a lot of terrific colleagues in research. We're number 1, number 2 in research over many years. We have a terrific equities platform, fixed income. We cover a lot of Indian large multinationals, and we cover a lot of US and European and Asian companies that are doing business in India. So it's important for our clients that want to be here. It's important for India clients that are traveling. It's important for the services for ourselves as Bank of America. And what India is doing, how it's growing, where it's investing is so critical to the global economy. If India is going to be a $5, $7, $10 trillion economy going forward, we need to understand how that is happening. It impacts supply chains. It impacts demand for commodities. So India is critical to really filling the global picture that we operate in, as well as actually executing on what we need to do for our clients. And to the second part of your question, in that context, a healthy India is good for a healthy global economy. Through the financial crisis and a little bit beyond, 60 or so percentage of global GDP growth was through the old or former or current BRICS, as it's called, the emerging market countries.
Yes.
I'd say the constitution of that has changed in the sense of the economies within that are really performing and not. And when you going forward, countries like India with the scale they have will be needed for healthy global growth.
Right. So that's the importance of India in the global arena. But Bernie, when you look at Bank of America's strategy here in India, now what is the way forward? You have a sizable business, you have a long relationship here, and you have connected with the depths of many markets over here in the financial services. What is the strategy going to be?
The strategy is simply to grow with our clients, the clients that are coming in from abroad and the local clients as well. So as the Indian economy grows, we want to be here growing with it. It benefits us selfishly, but we think that if we come in with our balance sheet, with our resources, with our know-how, with our research platform, if we help have a dialogue with the regulators about what the financial and capital markets architecture should be, and that will help India to grow as well. So it's really simple. We come here, we see what our clients are doing, and we see where we can help with that. And I think if we can do that, then it's terrific all around. And so that's absolutely what we're executing.
So growth of business from India.
Yeah.
Do you see that meaningfully increasing for you?
Yes, and I think because it's been such a positive story from the large clients that we've met. So in the first place, as they're accelerating their growth plans, I think we can. We met a terrific company yesterday, and the CEO said to myself and Kaku, our country head, he said, we went to our board the last year on a 3-year plan that had X growth rate, a 5-year plan that had X growth rate. He says, within the first year of that, we've been back to our board this year to say, actually, that growth rate was too conservative, and we're actually going to dial it up. So we think that growth is going to help drive things. And then secondly, part of the challenge for us, frankly, as a global firm, is to deliver those products and solutions to clients in country. Yes. So a lot of what I'm doing is to help my colleagues here tap into our global resources, whether it's our excellent people, whether it's our balance sheet, whether it's our liquidity, again, whether it's our intellectual content, just the flow of what we're seeing in other industries elsewhere, the learnings that we've learned in other countries that have been through some of the growth cycles that India has. Mm-hmm. And so we think we can do a lot more with the clients that we have here. We think that as more clients come, we can do more with them. We think that we have terrific clients in Asia and Europe and the US that are doing business here that we can do more with. So it's growing fast with the ambitions of the clients we have here, and then bringing more of our resources to help our clients grow.
All right, so the growth story for India seems intact from what you're saying. But Bernie, you are a banker, and the biggest question which is going to impact the world market and businesses in India also to a large extent, and liquidity flow, is going to be also the US Fed Reserve really cutting the interest rates. Now, in the most recent commentary coming in from the Fed, they've said that they need more data to see that inflation is tackled, while the market, after tapering their expectations, has come to a September kind of a cut and maybe one cut this year. As a banker, what do you think? What is the thinking at Bank of America, and what is the right estimate when it comes to this interest rate cut?
If I knew what the right estimate was, I'd be running a very successful hedge fund somewhere else.
All right, what is the opinion which is building now after these recent comments and the recent data?
Yeah, no, I know exactly what you mean. And look, who knows? There was a large disconnect at the start of the year between what the market's expectations was and what the central bankers were saying. I had the privilege of joining some of them in Switzerland in March at the Basel Committee, and there was a sense of in a lot of academic papers and a lot of discussions as to why there was that disconnect.
Yes.
And as you rightly point out, there's been less of that. So our research team have a view, and I think at the moment they're thinking perhaps one cut before the end of the year, and you can see what a lot of others are thinking. And of course we can see what the markets are pricing in. My sense has always been that the looking at the underlying strength of the U.S. economy and the health of the U.S. consumer, we have 60, 70 million customers in the U.S. We have a sense of what they're spending on, what their bank balances are like, how they're feeling from our interactions with them, and how well we service them. I always had a sense that the U.S. economy was stronger than perhaps would be shown. And then we saw, again, through places like India and Korea and Japan and others, we saw a lot of foreign direct investment going into the U.S. as well, with things like the Inflation Reduction Act and some of the large policies like that going on in the U.S. and elsewhere. So it always seemed to me that it would be a little bit tougher to come down as aggressively as the markets were pricing in. But if I were the Fed chairman, I would also look for the data to see, where we are. And it's not a bad situation to be in if the economy is doing as it is, and there's a sense of, okay, is it 1 or 2 this year or a little bit next year? I don't think it makes a huge amounts of difference, and I think they're doing a good job in trying to manage that.
So is the September expectation still intact?
Well, that's in some quarters. As I said, I think that I think quite a few market participants are sort of saying, look, let's wait until the end of the year to see. Who knows, if a lot of data comes in, suggesting maybe a little bit of softness, the Fed might be prepared to move a little bit more. I think certainly, trajectory is lower. I always feel 1 cut or 2 September or December doesn't make a huge amount of difference. You know, sentiment shifts a little bit. And by the way, I think by the time we get to September, October, there'll be a lot of the next set of elections coming along that will probably preoccupy minds a little bit.
Okay, you read my mind. Since you brought up elections, maybe we can finish that answer.
Elections at the start of the conversation.
No, so that was India election. This year is a year of global elections. Right now, UK, France, and then ending with the US. What is it that you're sensing? And there is a lot of excitement and competition, like the way India also saw in the past.
Well, the one thing I can say so far, I know we've had quite a few. I think there was Taiwan at some point this year, but there's been quite a few surprises. Mexico's election was a little bit of a surprise. I was in Mexico in February, March, and it was a surprise how strong the win was. People were not sure how strong it might be. South Africa's election was a big surprise in terms of, and people thought, well, the ruling party there may not get to 50%, but they didn't expect it to be so low in the coalition that it was, and we talked about India. So I don't know if there'll be any, I don't know if the surprises will continue. And I think the US election has always been a sense that it'll be close. It was close the last time and the time before, and I suspect it'll stay close again. And I think that the markets and investors and market participants and all of us will manage our way through that.
All right. On that note, I'll take a short breather. But Bernie, lots to talk with you about. Bank of America's thrust towards sectors of the future as well, sustainability, technology, lots happening there. So I would like to pick your brains on that. But after a very short break, stay tuned to CNBC TV 18. All right, welcome back. We are in conversation with Bernie from Bank of America. So Bernie, we were talking about the various sectors also that Bank of America is steering towards. When it comes to technological disruption, and artificial intelligence has become a household name only recently with ChatGPT, even though the applications were available for a few years now. How do you see this shifting the overall market, and what's your view on the business in this area?
Well, I think technology and the impact on technology and financial services has been huge for many, many years. When I started in foreign exchange, there were lots of traders that were trading a particular currency, and when I roll forward now, very, very few traders trading even bigger volumes, and you're seeing automation going through in many other asset classes as well. So I think that's been happening. If you take our own retail platform with some of our offerings, we only have a consumer business and retail business in the US. And if you look at our offerings there, whether it's our Zelle platform, our Erica platform, we have platforms where our customers can talk to our machine learn application to ask what their balances were, ask to pay this person or that person. So we've been on that journey. Yes. And I expect the technology to continue to be disruptive in financial services, in biotech, in medtech. And I think that will continue. I think as we get through more detail around AI and generative AI and ChatGPT-4 and other iterations that will come through, I think we'll learn so much more. We're learning so much more around large language models, small language models. I know people that are looking at the core chip architecture behind that and different solutions coming to bear. Certainly, yes. So much investment has come to this space that, as usual, I think will drive even more innovation and around it. And I'm excited for that.
Yes, a lot of structural shifts have really taken place, and people do say that the next war will be on the chip and really holding that particular resource. So supply chain is very important. But with the advent of artificial intelligence, there's also a raging debate on man versus machine. Which side of the argument will you be on?
Oh, gosh. I'm not sure I will pick sides on that, and I'll stick to my knitting as a banker. I think that, and again, I think it's slightly, how shall I put it? I'm not sure if that is an argument to be fought, because whether you go to the steam engine, whether you go from horse carriage to steam engine, whether you go to computers to calculators, whether you go to other materials development, plastics from cotton. I was reading an article the other day about how sheep fur has been, technology came to take that over, and that was the center of sort of old traditions. And I'm sure if you go around India, I think there are some terrific old traditions that may come back in a niche way using natural products, but maybe new products have overtaken that. But then some of those plastics may be taken out of it. So throughout the history of scientific development, man has performed certain activities that machines and other technology have taken on. Now, you might say it has been a willing giving up of those, and you might get to a point where the new technologies are taking certain activities away unwillingly by man or human mankind, or human womankind, or all of us. And who knows, we'll see. But I remain an optimist about the advantages of technology and how it improves our lives. But also, I remain somebody who says we should be very cautious about the dangers of technology, whether it's fire or whether it's nuclear power. It always comes with, or whether it's the internet, it always comes with a cost that we have to be super sensitive to.
Right. That's a very good point that you made, Bernie. Consume the technology that is available to make our life simpler and easier and maybe a little more improved, but don't get consumed by it. That's what we tell. For social media, at least, we implement that. But Bernie, also changing tracks to another important advent of transitioning to sustainability. And Bank of America has done a lot of business on that, is taking huge strides with some very ambitious targets. So how do you see this thrust building? And how do you see the momentum? And what is Bank of America's strategy in this?
So, we were chatting a little bit about this earlier. We have been on this journey for many years. We were very, very early participants across the piece. I mean, it's such a wide body of work now, but
right.
Early on, from saying how much financing we wanted to crowd into the climate change space, we declared $1 trillion, $1.5 trillion, or more the way there. We were very early on in arcane aspects of climate change, for example, the accounting rules, and we've been spending a lot of time with the ISSB, for example, the International Sustainability Standards Board, and urging adoption, whether it's that or something else. But our ability to measure the environmental impacts really makes a difference in terms of moving these things along. So, and I can mention, those are two examples, whether 8 or 10, where we've played in that space, and we continue to really bring our intellectual capital to work, thinking about ways in which we can bring blended finance to play, to drive some of the harder areas of the environmental change. I personally am a big fan of figuring out how we can get markets, maybe because of my markets background, a market functioning carbon credit market in some shape or form that allows people to transition, to take risks, to pay more or less, to have a price mechanism for environmental sort of impacts. So I think all of that is happening. And I do think, and I've been really encouraged by, through various shocks, whether it's the pandemic or whether it's some of the war in Europe that has happened, there has continued to be a commitment in society at large that we really maintain as good a pace as possible on this transition.
Right. So transition is taking place, but the momentum is something that we have to see how sustained is the effort towards sustainability. But you also made a brief mention of carbon credit market. Now, India is also going to embark on that. Just recently, the US government has also given out a policy document. How do you see this carbon credit ecosystem developing? And also, how are the companies going to utilize this in their benefit? What's your view on that?
Well, I think that if it develops in a way in which you're able to develop an acceptable, well-functioning, well-run, well-regulated carbon credit market, whatever you call it or whatever the contracts might be like, the basic principle is that you can have people who are generating carbon credits and people that want to acquire those. And that incentive will mean that naturally, without a lot of regulation and laws, very organically, it'll bring a lot of players to the marketplace. And I think that will mean that there, as in anything, in any walk of life, which has been the brilliance of markets overall, somebody will sit in the corner somewhere and find a way to produce things that are beneficial in a credit way from a carbon perspective. That will help, and then there'll be somebody that is trying to transition or trying to get around that, get around their carbon situation that can then benefit from that. So I think it'll generate a decent ecosystem of demand and supply. And another really important thing beyond, companies, when you talk about companies benefiting, there'll be those that might need it, but there'll also be companies that will be set up to supply, which I think will be terrific. The brilliant thing about entrepreneurship is people looking to find solutions. A lot of people turn up and they say, I'm going to find solutions for rainwear, for clotheswear, for a certain type of shoe, for a certain type of tennis racket, and I'm going to profit from that. And somebody sitting at home just gets up and they say, hey, wow, here's this new lightweight tennis racket that makes things better. They didn't have to go through the brain damage of trying to figure that out themselves. And I think if we can apply this principle to the carbon markets, it would be great. But another really important point of why I'm passionate about hoping that we can get something that works is that there's an element of what I call, a number of people call it, just transition in the carbon credit space. And as we're transitioning, there will be winners and losers. And it's really important that we make sure that there are not too many losers. There are people for whom that marginal cost of being carbon neutral is really high at the household level. And then there are countries as well that haven't really done much polluting. They were kind of about to start. They were about to roll up their sleeves, chop down their trees, dig up their coal, and off they go on the journey that others have been on for a long time. India is just about to be on. And we're saying to them, no, you can't do that. And they're saying, well, hang on, you did that when you were growing. And we say, yes, but we didn't realize it wasn't so good. And we need to find a mechanism. And there has been, and at COP, and there's been a lot of discussions around that, and many discussions in the forum to get a just transition in place. And I think this would help.
No, that's a very good point, Bernie, because a lot of companies, in confidence of line, they do say that the cost of sustainability is going to take away their lowest cost of production that they maintain for several years. And that's one tough decision that they have to make, but they probably will have a two-pronged strategy of working on both the fronts together. So that's I think, one of the challenges that a lot of manufacturing companies in old economy sectors that they have been facing. But to wind down this particular conversation, Bernie, I definitely want a little bit of insight from you on all your discussions that you've had. If you summarize it into 3 important trends for India, or 3 most important perspectives that you got and insights about the market, what would that be?
Oh gosh, thank you. And actually, just very briefly on the previous point on the cost of complying of climate change, those costs are higher than we can anticipate at the moment, and part of that whole dialogue will allow us to see how expensive it is in terms of not fixing the climate challenge, and it might incentivize to do a little bit more. With respect to some of the observations, I would say that first of all, I think that on this trip has been terrific to see a certain really confidence and maturity in Indian institutions. And in the process that India has just been through with elections across the piece, and I think that's been terrific. I think secondly, I've been encouraged by just even, I'd say, more passion and ambition from a lot of the corporate leaders I've met in terms of how confident they are. It feels as if they're even more confident in the prospects of India over the next period of time. And it gives me confidence to ask my colleagues back that sit around the management table with me to continue to invest in India, as I said, to help work alongside our clients as they show this confidence and dial up, in fact, their investment plans and their ambitions for India. And the third thing I would say is, from my last trip, there's probably been a little bit more, maybe to find the right words, I think a maturity or a realism in terms of how to get there on the journey. I mean, perhaps a few years back, there was a sense of, yes, we need to get to this size economy and we need to grow. Yes. Everybody still says that, but I think people understand a lot more what it takes, what the difficulties might be, how to get over this hurdle. I think it leads to more determination, but I think it also leads to more perspective as to what needs to come to the table to make things happen, which means that it's more likely to happen, actually. And I think those are 3 things that I've noticed on this trip.
So the business community is very energized, and I would say that, the positivity is contagious at this point in India. That's a summation of what you last mentioned, and that we are feeling it all around, Bernie. But thanks so much for giving your insights and giving us a sense on your perspective on various aspects and new businesses, and especially the strategy of Bank of America. Great chatting with you. Thank you so much for joining us here on CNBC TV 18.
Thank you.
Thank you, and thanks to all our viewers for tuning in. Thanks so much.